Hey everyone, Chris Lopez here, and welcome back to another Colorado Springs investing podcast episode. So today, Jenny's going to run us through a deal about a turnkey townhome that she took down, just a couple weeks ago, Jenny?
A couple days ago,
A couple days
last
ago.
Friday.
Okay.
Yep.
So this is quarter one 2020 then we're talking about.
Yeah.
And this is, because I know you bought a couple townhomes here recently. I say you and your clients.
hmm
This is a property that you bought or for one of your clients?
Trick questions. So
Oh,
this
okay.
particular property I bought for myself, but I actually came across it because my client found the property or the builder and wanted to check it out, and they bought the property next door to ours. And I asked the builder, I said, "Do you have any others left?" "Yep, we have this one." "Okay, I'll take it." So that's kind of how this one came across. I had already done all the analysis with them and the due diligence with them prior to taking a peek at it. So it was kind of easy to make a decision at that point.
So they had already got under contract. You helped them with all the due diligence analysis, and then
hmm
you're like, "Oh, it
Like
looks
a
good. There's another one. Let me grab it yourself."
Yeah, like a day
Yep.
later, I went under contract on the one next door.
Nice. Okay.
Yeah. So yeah, just to kind of give a basic overview. It's a new build turnkey townhome rental property, and it's located in Security-Widefield. And this is my first property that I've bought in this particular area, but I'm really excited for the potential for this particular region of Colorado Springs. And the reason behind that is because there's a lot of new industry that's coming over to Colorado Springs airport area. And this is really, in direct, when I was driving over to the property, I got stuck behind a bunch of Amazon trucks. So that was kind of exciting to me how close, how close it was to this particular property. I just see a lot of growth and jobs coming into this particular area. Um, yeah, and we found it on the MLS, as I had mentioned. Another one of my buyers had picked one up. They found it on the MLS, and we went over to the builder's location. I think a day after that, we were able to get an appointment, and that's where it came from. So nothing, super secret or anything like that. It was just one of those ones that popped up. Um, and then investor profile, it's me, so I don't really have to go into that on that.
Actually, one thing. Let's talk about this because I know because I think it's always interesting to highlight how investing strategies shift as the market
Okay.
changes, but also as a person changes as well.
Yeah.
So if you don't mind me kind of maybe talking about you in the third person, because I
Sure.
know a lot of the first properties you bought, you BRRRR'd, you and your husband, you guys were out there working nights and weekends to do
hmm
all the stuff, and then early well, in 2020, you had your first daughter,
hmm
you left your W-2 job, and then as you're looking to buy more properties, you're obviously busy as a mom, and then you also have been very busy building out the Colorado Springs division, with the Envision Advisors. So, two brand new things, which both, either one of themselves keeps you very busy and a little bit on the
Yep.
stress side, together it keeps you very, very busy. So I'm guessing those two things, among other factors, probably made you happy to look at some more turnkey type properties, right?
Yep, you nailed it. That's exactly right. Just I'm exhausted, so so I was looking for a really easy win at this point.
Great. All right. I just like to highlight that because that's something that, yeah, I always important as people start their investing strategy, realize that, hey, a property that may not work for you may be a grand slam for someone else or vice versa. And expect your strategy to shift over the years because it will as you grow as a person, your portfolio changes, and your life changes.
Exactly. Yeah, I think that was a really good summary of that transition. So just kind of going into the details on this. So again, it's a townhome. It's a 3-bed, 2.5 bath, and a 2-car garage. It's off Bradley and Main and Security. And it was listed at 248,900, and that is after including the AC, the air conditioning unit. I think that was like 4,000. But this was the out the door price. We're talking car terms here, since it's a builder. And so we bought it for 248.9.
And were
And
you able to wrap the AC purchase into the loan? Okay.
Yep. And then, so reason why we liked it, as Chris described, I just needed a really easy win at the time. We had done some cash out refinances on some of our other properties that we had put a lot of sweat equity into, did the BRRRR method, and then we did the slow burn method again after that. So we were sitting on some capital that we wanted to redeploy, but just didn't really quite have the energy or appetite to take on a major project. So we came across this and it worked out really well. I expect this area to remain strong based on the reasons that I had mentioned previously. And then, quite simply, the math worked well on it. So, going into some of the contract details, found the property on the MLS, and actually giving credit to my clients, they found the property on the MLS. So we happened to catch the builder when they were opening the units for sale. So that's kind of what, I called up the sales agent and I said, my clients would like to see the property. Do you have any slots that they could come over? And they operate on a first come, first serve basis. So they gave us a slot. So we were able to go over and see it. And my clients, they saw the product and they decided on the spot that they were going to purchase it. I slept on it one night because I wasn't intending on being interested in it. So that's kind of how that worked out. And then for inspection concerns, there's none. It's a new build, so it has a builder's warranty for anything that comes up. But I mean, we did do an inspection just to make sure everything was good, but everything, very minor things that they found, they're going to take care of within the warranty. And
that's just a quick reminder out there.
yeah.
Always, 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 everyone do an inspection on new build, and always, always, always do a sewer scope.
Yep. Yeah, I completely agree with that. The inspector asked, "Are you sure you want to do a sewer scope? It's a new build." I said yes, because I don't know if someone flushed concrete or something. I have no idea. So it's better to find out on the front end.
I've heard two horror stories about sewers and new builds.
Mm-hmm.
One was with an inspector told me that brand new build detached home sewer was good, but no one ever connected it to the tap, to like the city tap at the street. And actually, a lot of the stuff you flushed down the toilet was flooding back into the house and the foundation area. So very
No.
bad. And then
Yeah.
another client, actually not client, but Preston, who bought his Nomad new build townhome near Denver University a few months ago. I forget the exact amount, but there was an issue with his sewer, and it was a good $5,000 or $8,000 repair, I want to say, that the builder had to take care of. So two reasons why you always spend $120 to do a sewer scope.
I will never not do a sewer scope. It's bitten me in the behind way too many times in the past that I've learned from it at this point. There'd be no circumstances that I could imagine not having a sewer scope done when buying a property. So for financing, we use Cornerstone Home Lending and just a conventional mortgage. It appraised at value, no concessions, no PMI, put 25% down, interest rate buy down. So we paid $2,100 for a 1.125% buy down. So we ultimately are paying at a rate of 3.125%, which is pretty good for.
The par rate was 4.25, and you bought it down to 3 1/8. I'm sorry, you bought it down to 3 1/8 for $2,100.
Mm-hmm.
Wow,
it was kind of a no-brainer.
Yeah, that's a huge spread on there.
Yeah,
don't seem that big.
Yeah, the lender was like, "Don't even bother asking about the other option." He's like, "You might as well just do this." I'm like, "Yeah, okay, sounds good."
Yeah, that's a no-brainer.
Yeah. So 3.125% for an investment property. That's awesome. That's really exciting. So just going through Joe's spreadsheet, as I mentioned, we put 25% down. Acquisition price was a little over $7,500, is about $7,800 between title, lending costs, the price to pay down the rate. So just those sorts of costs. And then, so we're all in for a total initial investment of about $70,000. And we actually got the unit rented. The new tenant is set to move in tomorrow or Saturday. We're not sure. The lease starts tomorrow at least, for $16.95, which I know we've talked about this, Chris, that when my clients and I were running the numbers, we budgeted 1,600. Even though we had seen some comps for 1,700, it made me a little nervous running the numbers at that rate,
Mm-hmm.
just because I don't know, it just seemed a little high to me. And what I usually tell buyers is run the numbers at the lower end of the spectrum, but then when you go to list it, just shoot for a little bit higher, and see what you get. And if you don't get any bites, then just lower it after a week or so. But I think that's kind of the best way to manage expectations for that. I am not paying for property management. I know you hate that I self-manage, but hopefully this one will be easy. Um, Budgeted 5% for maintenance reserves. I would have to expect that it's going to be less than this, especially during the first year because of the builder's warranty and all that. But I think that it's smart to just put a figure in there anyways. There is an HOA. This is my very first rental property that's in an HOA, and it's $115 a month. And they really only cover trash, common area. Um, but then the benefit to us is that the HOA also covers the roof, the exterior, and the gutters.
Oh, nice.
Yeah. And then so property taxes. This is an interesting one. I think it's currently, I don't know, $50 a year because they are assessing it at just a very small plot of dirt. They don't have the improvement on it. So I'm budgeting $1,200 by the time they do their next assessment. And then property insurance was $700 a year.
That seems high to me for a townhouse down there. Is that?
I agree. Yeah, it actually bumped up from when I went under contract originally, which was like last summer. It took quite a while to get built. We were quoted 500, and I thought that was seemed reasonable. And then when we went to purchase, they said, oh, it's 700. So we kind of asked them what happened, and it sounded as if there were a lot of townhome claims that kind of drove prices up, which I was a little surprised about.
Yeah, because I mean, a lot of times we'll have insurance up here in Denver for townhomes cheaper than that.
Yeah, because
Hmm.
I mean, a lot of my single family homes are about $900 a year. So, and I own, the full exterior, or I'm responsible for the full exterior in the yard and garages and stuff like that. So I don't know. I thought that was kind of interesting, but
So,
not
are
not a
you
big
going
deal.
to get that requoted, or like, hey, it's $200 a year, whatever?
It's $200 a year.
Yeah,
I don't really care.
it's
So,
been on my list to like requote my insurance for like 9 months,
mhm.
and it's still on my to-do list.
Yeah, it's just not a big,
Yeah.
a big deal. So rental analysis, I'm expecting annual cash flow before taxes of $5,837.
Wow.
Yeah. And then cash on cash return of 8.3%, cap rate of 6.2.
Ooh, this is a
Um,
great one.
yeah. So, to me, this was a winner because, as I mentioned, I was just looking to redeploy cash out proceeds that we had taken into just something that wasn't going to cost me too much in the way of energy and brain power on that. So I was really happy that we stumbled across this one. So yeah, for buying a asset that we did not technically use any of our cash that we've saved through earnings or something like that, is just through the equity of our existing rental properties. We were able to buy a really good cash flowing property that it actually, since it took so long between when we went under contract and when we actually closed on the property, they're releasing new units at about $20,000 more than what we bought this one for, and they're identical, just across the street. So I kind of see that as we've already earned about $20,000 in equity on this one.
Yeah, and for listeners out there, are there more of these units available in like the next phase or next build out?
So there had been a couple, but they go really quickly. So I've sent a few to some other buyers, but yeah, they get snapped up real quick.
Yeah.
So if you're interested, give me a shout, and then I will make sure to let the sales agent know that we're interested and get on their list.
So you're at almost $6,000 a year in annual cash flow, and probably be slightly higher since you have, should have lower repairs and reserves.
And no
Now,
taxes for the
yeah. Oh,
first year.
and then you estimate taxes. The other thing
Hmm.
is you factor in property management. So what that would probably bump cash flow down to what, low 4,000s if you had a PM in there.
Yeah,
Yeah,
yeah.
which is still, I mean, a very strong cash flow.
Hmm. For really not lifting a finger
Yeah.
on it. So
So can we? Because I know more of the backstory on here. Do you recall? Did your clients who bought the other unit in there, they have similar numbers to this? Like, what was different about their transaction?
yeah, so the only key difference between their transaction and ours is that they put 15% down. So they're going to have PMI, and I don't remember if they did upfront or monthly. I want to say they did monthly.
Yeah,
So
it was
they were
monthly.
able, yeah, they were able to put quite a bit less down. So they're able to, ensure that they have proper reserves by not putting as much down for this property. So I think that was a really cool option, also.
Do you remember what their cash flow was at 15% down? Assuming, are they self managing or hiring a
Mhm.
PM?
They're self-managing and they have the same interest rate as us. So I'm not sure if you can do the math real quick,
Wow.
what that would come to. Yeah.
Yeah, I don't have the spreadsheet. We'll look at that later. But that's always an interesting
Yeah.
thing to look at because I remember it was actually I happened to uh, be around them when they were talking lending, so I remember going through options with them, and I was like, yeah, that 15% down seems like a no brainer to me because it still cash flowed
Yeah.
really well.
It still cash flows, and to figure that you have 85% of the value of this property at 3.125%. That's awesome leverage right there.
Yes, and that's a really great rate, especially for a 15% down.
Mm-hmm.
Wow.
Yep.
Yeah. Awesome. And this is one of the nice things about really for single family, detached homes and townhomes is you've got a lot more flexibility in your down payment options. Multis usually at 25% down unless you're doing an owner occupant. Condos usually 25% down for just, the way they underwrite them. But single families, 15%, 20%, 25% down. We have investors doing all three options. Like I said, it was really interesting to me. Like, Jenny, you bought this, and what, right next door or a few units next door, clients bought identical unit, and you guys did completely two different financing options. And they're
Yeah.
both right
And both
for
are
your
good.
individual scenarios.
Exactly. Yeah, that's why I love real estate, is because there's no one way fits all scenario for that.
Cool. Awesome, Jenny. Well, this was great. If people have questions, they can always reach out to you, right?
Exactly.
All
Yep.
right.
It's JENNY at envisionrea.com.
Great. Jenny, thanks so much for putting this together. We'll see you next week.
Thanks, Chris.